Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, 2021 is going to go down as the year that completely destroyed the housing market, and 2021 is going to go down as the year where the Federal Reserve failed to act. So as a result of their failure to act, we are about to witness quantitative tightening in the likes of which we have never seen in our life, or we have never seen in decades. And not only are we going to start to see that more and more in 2022, the amount of time that it takes for all of that quantitative tightening to take effect is going to be at a record pace. And I suspect it is going to create another whiplash situation. I fear, y'all, and I've been saying this, that in 2024, the Federal Reserve is going to reverse course, create another whiplash effect, which is essentially going to be designed to get the current administration reelected. So I don't know if that's going to happen or not, but I will tell you this: 2021 was a very damaging year for so many Americans and for our housing market in general. And today what we're going to do is we're going to unpack an article from Fox News titled "Markets Brace for a 100-Point Fed Rate Hike as Inflation Roars to New High." Remember, you guys, quantitative easing is out, right? We're in this situation because of quantitative easing. So all we have left is quantitative tightening, which is going to essentially make everything worse. The Federal Reserve triggered a recession, right? That's what they're doing. Hint, hint, obviously, right? Regardless, you guys, I'm not a financial advisor. Although my bio is as a realtor, loan officer, and educator in Texas. This is just my personal YouTube channel. So please, you guys, help me spread this message. Help me work the algorithm. Please like this video. Subscribe if you haven't. Hit the notification button. As always, you guys, please comment below. What I really feel is special about Real Estate Mindset are the people, the subscribers, and our community. I really love you guys. Thank you for all of that engagement. You have no idea how much I talk about all of you and how proud of you guys I am. But let's get started on this article right now. The article goes on. While market consensus is for a 0.5-point interest rate hike at the Fed's policy setting meeting this week, the odds for a larger increase next month are surging, with a potential 75 basis point or 100 basis point jump on the table in July. About 16% of traders are penciling in a 100 basis point jump next month, compared to 43% foreseeing a 75 basis point increase, according to the CME's group FedWatch tool, which tracks trading. Are you guys thinking what I'm thinking? What an absolutely horrible job the Federal Reserve has been doing in general, but what an absolutely horrible job the Federal Reserve has been doing as far as telling us what's coming next. What have they ever... You guys, here's the thing. If the Federal Reserve would just tell us what's coming, we could price it into the market. We could prepare accordingly. But remember, just a few months ago, inflation is transitory, right? What an absolutely garbage job the Federal Reserve is doing at helping us prepare. It is what it is. Let's continue this article. The new projection come on the heels of a scorching hot Labor Department report that showed the Consumer Price Index, a broad measure of the price for everyday goods, including gasolines, groceries, and rents, rose to 8.6% in May from a year ago, faster than expected. Prices jumped 1% in the 1-month period from April. Obviously, right? We have runaway inflation. So the CPI was at 8.4, and a lot of people were hoping the 8.4, or rather 8.5, was the peak. 8.6 came out, essentially showing that we are not at the peak of inflation. But here's the thing, you guys. Obviously, we're in runaway inflation. So obviously, the Federal Reserve is going to trigger recession. What else are they going to do? Anyways, I'm sorry, you guys. It's just, to me, it's so clear. Let's continue reading the article. The dismal report prompted some banks, including Barclays and Jefferies, to revise their expectations for the Fed meeting this week, which concludes on Wednesday. The strategists now expect central bankers to approve a 70 basis point hike as they try to project confidence to the markets. Well, it's not projecting that now. The US central bank now has good reason to surprise markets by hiking more aggressively than expected in June. The Barclays strategist wrote in a note Friday, "We realize it is at a close call and that it could play out in either June or July, but we are changing our forecast to a call for a 75 basis point hike on June 15th, which is either today or tomorrow, depending on when I release this video. Policymakers have not lifted the short term interest rate by 75 basis points since 1994 and have not approved a 100 basis point increase since Paul Volcker led the central bank and ran an aggressive inflation crushing campaign in the early 1980s. The stock market has been absolutely destroyed. If you have a 401k, my heart goes out to you. If you invest in stock, my heart goes out to you. Complete bloodbath, right? And this week has been total bloodbath. They've already called it's a bear market. And a lot of that is because the Federal Reserve keeps flip-flopping on what they're going to do, right? It went from 25 to 50 to 75 from transitory inflation. Do you see how much harm is coming from inaccurate information from the Federal Reserve? How is this happening? How is this happening? We need more transparency, in my opinion. We need more transparency, but the Federal Reserve has special privacy, right? It has special privacy. It's really crazy, actually. Anyways, let's continue with reading the article right now. Federal Reserve Chairman Jerome Powell rebuffed the possibility of a 75 basis point interest rate hike at the beginning of May, following a policymakers meeting at which they voted to lift rates by half a point. Officials have signaled that a half a point rate hikes are on the table in June and July, although it's unclear how Friday's report could affect that. A 75 basis point increase is not something that the community is actively considering, Powell told reporters at the post-meeting conference. A lot has changed since then, hasn't it, guys? But that was before the April and May inflation reports, with both came in hotter than expected, underscoring just how strong inflation pressures in the economy still are. Bond yields spiked higher and stocks tumbled after the worse than expected report fueled fears that the Fed will have to ratchet up its inflation battle. What an ugly CPI print. Not only was it higher than expected on almost all fronts, pressures were clearly evident in the stickier parts of the market. The Fed's price stability resolve is going to be really tested now. Policy rate hikes will need to be relentlessly aggressive until inflation finally starts to fade, even if the economy is struggling. Now that's true. So in other words, you guys, this is just the beginning. We're probably not at the peak of inflation. Interest rates are probably going to continue to surge. Quantitative tightening is going to continue to surge as well. Now remember, in September, they're going to double their asset selling. So in September, we're probably going to have a surge again. But one thing needs to happen right now, and the Federal Reserve essentially needs to continue this line of measures to combat the runaway inflation. Now, it is shocking how fast the housing market is crumbling. I hope it shows you guys how fragile the housing market really was. Now, overall, you guys, we need this to happen. We want this to happen, right? We need a healthy housing market. So personally, now if rates go to 8, 9%, I'm happy about that because that's going to destroy home value. And I plan on capitalizing on that, right? I'm preparing, I'm sacrificing a whole bunch of things right now so that I can win in the future. And I hope you guys are doing that now because this is going to be a really wild ride, you guys. And I believe purchasing in the end of 2022 and into 2023 is going to be some of the best buying opportunities. And I hope you guys win along with me. Now, thank you for watching this video, you guys. If you're out there investing in real estate, I do wish you luck and I hope you win.